Okay, hello and welcome to the Closing Beat, everybody. Happy Tuesday, right? Tuesday. Yeah, good to see you there. I got to do this real quick because I want to make sure this came through. We had some audio difficulties there. I want to make sure this sounds good. So I get this envelope in the mail from Stephen Jones. I'm like, all right, that's cool. Addressed to me. I'm happy with that. And then on the paper here, it just says, you're missing a single sticker on your laptop. And so if you look at the laptop, I got all these stickers of various drum corps on there. And Steven said, hey, man, send me a Guardian sticker. Did you even notice that last time?
No, I was kind of hoping it was Jerry Jones' son, Stephen Jones, but...
Oh, sadly, no. But
that's awesome.
Just as cool. So I got another sticker here to put on a laptop. Appreciate that, Steven. And let's get started here. So we're going to just go through everything here today because I did have a lot to cover, but obviously it's not live, so we'll take care of that for tomorrow. I want to mention the Guess the Dow. If you want to go to jazzwealth.com/Guess the Dow. Saw a few of you just actually before the show, get your guesses in there and say you got your guesses in. Good luck to you, right? Good luck, because the Dow, by the way, the Dow, like, how do you... Like, good guesses for those of you that got close, because we've been just chopping around in this range here and fairly wide for the Dow. So we'll see how you guys do there this week. As for the S&P, here we go. So yesterday was actually the second lowest volume day of the year and one of the smallest ranges we saw. See that little guy right there where the cursor is over there? And basically, we're waiting on inflation news. Today, the market says, we're still just waiting for inflation news. So what's that going to look like there? Another day of waiting on really inflation there. Remember, it's getting into that slow time of year as well, where volume drifts off and starts to get a little quiet and eases back. We get into the summertime, everybody goes on vacation and stuff. So if you see a lot more of these narrow range days mixed in with some booms and a boom back and forth, those are news-driven headlines, right? That's the only thing. We're looking for news that gets us excited for a little bit, and then we go, what else? What else can we talk about? So that's the market that kind of we're heading into now. Something to keep in mind there, okay? And that goes for all the indices as well. Now, inflation is going to be the focus here, obviously, and we're going to take a look at how some of this stuff works. So if we look at the CPI, which is the Consumer Price Index, that's the inflation number. It's 4.99% here. I say that tomorrow it ticks over 5%. I'm going to go with 5.09% as my guess there. And remember, inflation is made up like this. Let me show you. So if we go over here, inflation is made up of the CPI number. It's 79.6% of core CPI, right? So that's how we make up that headline number, 79.6. Then we have food at 13.5% and energy at 7%. And the interesting thing here is the focus is on core CPI, right? So that's where we're at. When you're looking at the inflation numbers that come out, we're up here. Everybody's looking at core CPI, including the Fed and everything. So one of the things we can do is take a look at the various things that are going on inside of this to see if that number is going to go up or down. For example, used car prices are going to be up about 4%. We can tell that by looking at the used car auction market. So the wholesaler is going to buy those cars. So that helps drive that. It makes up 3.2% of core CPI. Airfares are going to be down about 2% because of lower gas prices. And also, Goldman Sachs has a real-time airfare tracking team that actually follows the price of airfares. And we have airfare prices actually falling there. So we know that's going to fall. Apparel is going to be about 1% higher. And when we factor all that in, that's how we get back to inflation ticking over 5%. So kind of a quick way to look at it there. But now you know when you see on TV, headline inflation's this, and then they just talk about that for a second. And then all of a sudden they go, whoop, they're over here, and they go, now, core CPI, and that's what they're talking about. Well, now you know that all that is just backing out food and energy, and we're left with this remaining 79.6%, which is made up of all these categories. So actually, when inflation comes out tomorrow, we can go through and look and say, well, look at this. we're looking at the prices of rent. We're looking at the owner-occupied rents. We're looking at people that are shifting, moving from one place to another, and what's the change in their rent payments there. Some lesser-known areas like pets and health insurance and stuff, but all those categories will break down. You can actually look it up and see what caused it. Right? Was it one sort of offshoot of an area here where we found that the private transportation services saw inflation like skyrocket? It's not going to be the case, but you can dig into it a little bit deeper. I like doing that thing, or doing that kind of thing to take a look at it. And I was actually looking through the airfare prices. So I can see that on the back end here through Goldman Sachs. Their team that actually tracks these prices in real time, like, it's almost like you want to be able to just call them up and go, hey, man, I was going to go to New York this weekend. Should I buy the ticket now or should I wait? Right? They're tracking it in real time. It is pretty cool. So all that to say that the market itself will basically just be waiting on that number. You won't have to wait very long because it's coming out there. We talked about the Dow already. Let's go over to the NASDAQ here, sitting at highs, sitting in the middle portion of this uptrend here. We could go like this. Go a little bit crazier here. Oops. Go a little bit crazier with this. Come on. I'll try to draw my line here. Let's go do it backwards. There we go. So it's a little sloppy at the moment, but you get the gist of what I'm saying. So we're in the middle of this kind of range right now. We're not near the top. We're not near the bottom. Any pullbacks towards the bottom are going to get met with new buying, people interested in paying that price. Any moves towards the top, it's the same thing as the S&P where we're saying, I don't want to pay or be the first person to pay over this price. But once we get over that, then I'm comfortable to say, okay, we're going to move on. The same thing will happen here with the NASDAQ. If we get over this price, people will believe that that's the next great move in the short term here for the NASDAQ and, sort of clear skies in the short term. So that's what we've got going on there. We take a look at the price of oil recovering just a little bit. We talked about that in more detail yesterday. And we've got interest rates. Nope, sorry. There we go. So we've got interest rates moving a little bit higher, sorry to say. As prices come down, rates go higher. We've been trading in this range as we're contemplating the Fed pause, so that something's going to happen or not. And while that's been happening, rates are going higher. The bond market is telling you that the Fed will essentially not want to pause rates. They're going to find a reason. Maybe it's inflation tomorrow, but they're pricing in the fact that rates may have to go a little bit higher. That is what's going on there. Looking around the markets here today, quiet. All right, quiet everywhere else. Industrials were your leading sector for the day, but only up like 0.2%. Not a big deal there. And basic materials continuing their little pullback. However, like, what do you do with that? It's just kind of choppy inside of this range. I don't know, is going up or down. There's very little to go on. Anybody that uses moving averages is saying, it's kind of flat. Yeah, I don't know. Long-term bias to the upside, but it's a pause moment. It's kind of a wait and see to see what's going on there. Now, tonight, on Jazz After Dark, we are going to talk about the money in the market, how to tell where the money is going to, and then how to dissect it. So I'm going to actually show you where money is moving in the market and show you why I'm deciding those things as we zoom in to figure out, are people taking less risk, more risk? How can you do it? So if I get hit by a bus tomorrow or the mic doesn't work tomorrow, then you're able to see how things are going to progress. You can do the research and figure it out yourself. We will talk about that tonight. A little sneak peek into tonight. I can tell you that those of you in the retail world, that's, me and you, those of you in the retail world that have been trading options, you've all but stopped trading options. So where have all the retail options traders gone, huh? Take a look at this. So in the light blue, I've got your single stock options, puts and calls, the amount of money going into those options. During COVID and when the government was throwing money out of a helicopter, everybody was using that money and going and betting on single stock options. GameStop, AME, all the things that you guys were playing in there, lots of activity. Since then, it's dwindled down. Where'd the money go? Uh-oh, look over here. They're going more diverse. People that are using options still are using ETFs now. No longer interested in stocks. It's off the freaking charts there, the amount of money going into that. So I can see by that, and we'll dive into this more tonight, but I can see by that this single stock option trader game is gone. You have your little blips here and there during earnings season, but other than that, the activity is in ETFs. If you know that, would you not want to be a part of that or go participate in some way? Could be kind of interesting. Could be kind of interesting, and we'll talk more tonight on that one. If we look at some of the stocks in the news, there we go. Take a look at this here, Tempur-Pedic. Do you normally hear us talk about Tempur-Pedic in the news? Not often. Remember we were joking before about Mattress Firm? And you guys even see this too. Like, who's buying a mattress at Mattress Firm? How is there a Mattress Firm right here, but then literally across the street there's another Mattress Firm? Like, what's going on? Well, Tempur-Pedic must have figured it out because they've decided, we like that game that you're playing there, whatever's going on at Mattress Firm. And they're going to buy Mattress Firm for, it works out to be about $4 billion. So whether they're running money or there's some other business going on there, I don't know. You can't tell me they're selling mattresses. You ever see somebody walk out of there with a mattress? No, you don't. So nonetheless, it'll now be Tempur-Pedic. Plantair, that was one of your bigger movers here today. Better than expected earnings, and they're talking about full year profitability. That phrase used more times than anything else in their earnings transcripts. That's good news for them, right? Having a profit for the full year, because remember, they barely made a profit. What'd they make? They made a penny 2 quarters ago, a penny a quarter before, and this earnings season they made 5 cents. So they're saying that's going to happen the rest of the year. We will make you guys a profit, and of course, people wanted to cheer that on. What I would say is this now interesting? So it was dead money before, little fits and starts, but you got nothing to write home about. But is it now not something maybe you want to take a look at? And I don't know if it's tomorrow or whatever, but if they're guiding that way, all looks good, and they want to bye, Kevin, see you later, and they want to do that, is that something that maybe makes this stock more attractive to more investors, which means it should go on a watch list and something you might look at? All right, PayPal, next up, not so good. This one's going the other way. So dead money for a while here, and all of a sudden it breaks down. Why? What's the problem? They report earnings, and these guys basically take a cut every time you make a transaction there. Well, their margin per transaction was lower. That's not good. That's how they make their money. So the total spread that they get between you paying whoever you're paying on PayPal or receiving, or doing it that way there, not so good. They also said that throughout the rest of the year, we should see and expect to see more transactions. However, our margin on those transactions is going to remain low. That's the main culprit there for PayPal, if you happen to own it or were just wondering what was going on there. Oops. All right. Let's see if I can type here. Skyworks, there you go. Actually, hey, I recovered pretty good by the end of the day. Earnings missed, a little bit weaker there. Guidance lowered going forward. Not quite a kitchen sink earnings report, but wasn't good for them. Problem is, can you see it? The problem is it gapped down here. So you start with a stock that's way oversold in the short term. Someone's going to look at that and say, well, even though they missed on earnings, that's a discount. That's what we want in the stock market. We want the market to go, and fall all the way back down. So there's the perception of a discount. People that have money over in their money market funds and CDs and stuff, they go, oh, I don't want 4% there. I want to buy the market. It's cheap. That's what you want. And well, that's what happened in Skyworks today. The people that make all of the makeups and lotions and potions and things with all the brand names that you see there beat on earnings there. And also, I think the coolest thing about them, if you follow along, it didn't move the stock in a favorable way, but it's already up so much. There's another round of price increases coming up. So not only are they telling their clients that and all the people that go and buy this stuff, they're saying, we're going to raise prices again, and it's not going to be a problem. They're just going to pay it. The stuff you wipe on your face that does me no good, you're just going to pay that price. New higher price, they're cool with it, and that's what's happening there. And obviously, the stock's killed it this year. Lotions and potions doing well. All right, Jazz After Dark here tonight. Again, we're going to talk about the action of finding money. Where is it going? How is it rotating? And why are people doing what they're doing? How do you take the data and actually come to a decision that that is what's going on? And I'm going to simplify it, but come hang out with me here tonight. 7 o'clock will be just shortly. And yeah, we'll get this all fixed and be ready for you live again tomorrow. That's all I got for you. And enjoy the rest of your day. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.